Crypto passive income bear market tips how to earn. How can you make money in a bear market? Investing in crypto can be a lucrative business, especially in a bull market where one all-time high, ATH, is followed by another. We also see these success stories being shared with friends and family and many people with limited knowledge investing in their favorite projects. But what if the profitable market cycle is over and we end up in a bear market? On average, this period of a bear market lasts 1 to 2 years, but how can you make money in a bear market? In this video, we will discuss a number of strategies so that you can also take profits during this period. What we will discuss in this video. What is a bear market? Strategies, fundamentals, patience, short positions, advantages, flexibility, responding to bubbles, protect your capital, disadvantages, pay interest, potential loss infinite, swing trading, margin trading, advantages, disadvantages, passive income, crypto pearls, and our conclusion. What is a bear market? A bear market is a market cycle characterized by sharp price drops. We see that FUD can occur where there is more sell pressure than buy pressure. Specifically, this means that many investors sell their positions and fewer people are willing to buy at that price. These financial actions are usually the result of large-scale government decisions that allow investors to experience FUD. In general, investors are pessimistic about the future and thus bearish. While the traditional stock market is also accompanied by market fluctuations, these are much more extreme in crypto projects. It is not unusual for a project to increase in profit by 1,000%. Just as we can rise exponentially, it is possible that in a bear market we may just drop by 70 or 80%. But is it possible to make money during a bear market? Strategies. Let's look at what strategies you can use to still make profits during a bear market. These strategies come with a certain risk. If you want to actively trade during a bear market, you have to be well aware of the risks. Fundamentals. During a bull market, we are often blinded by the unprecedented gains and the percentage increases that we often ask ourselves whether it is worth taking our chance. After all, during this market cycle, we are more likely to make profits. In 2021, we saw that more and more projects were coming in that lacked a use case. For example, we saw a lot of meme coins making their appearance, also often seen as shitcoins. The profits that can be made here are purely based on the hype that regulates the price of this currency. But when we get into a bear market, it's increasingly difficult to stay positive about a project without a fundamental plan for the future. Do your own research is therefore an important statement that we see more often. In a period of a bear market, fundamentals are hugely important. After all, you only want to invest in projects that you believe in, believe that they have a future, and that they also have a positive influence on the further development of the crypto landscape. Patience. Everyone prefers instant gratification, which means that we want to make profits immediately after an investment. When you first entered the market, did you also look at your exchange several times an hour to see if you had already made a profit? Or are you still doing it even now? Then you are certainly not alone. But how do you deal with this during a bear market when these are not profits, but often losses? During a bear market, there is anything but instant gratification. Related to the fundamentals of a project, having patience is necessary. You will not immediately make money in a bear market with this tip. But in the long run, this investment will pay off. Decide for yourself whether you want to invest, if so at what levels, and be patient until the market will recover. Short positions. During a bull market, investors typically take a long position. They are bullish and therefore positive about the future. A long position is when you don't start trading along the way, but see it as a long-term investment. But when there is a downtrend, such as during a bear market, you can also take a short position or go short to also take profits during a bear market. You will, as it were, predict the market by using technical analysis. You sell a share of certain coin that you do not yet own to buy it back later at a lower price. This borrowing is done via an exchange where investors make their digital currency available so that others can take short positions with their digital assets. How does this work exactly? Let's discuss it using an easy example. Example, suppose you do not have Bitcoin in your portfolio, but based on your technical analyses you predict that the price of Bitcoin will fall. This allows you to take a short position and thus earn money from this decline. You borrow one Bitcoin worth $40,000 through an exchange and sell it immediately. Your analysis was correct and the rate drops to $35,000, a difference of $5,000. You obviously have to return the share, in this example one whole Bitcoin, to the owner, with a current value of $35,000. This means that you have a profit of $5,000 in this short position. Please note that borrowing these assets is accompanied by a minimum interest rate. Flexibility, you are flexible and therefore not dependent on a rising market to make money. Through technical analysis, you can decide to go short on any project. You even decide here at what price you want to buy back this coin. Of course, this flexibility also entails risks. Responding to bubbles, when you are familiar with technical analysis and can properly assess the market, you can determine when a certain project is in a bubble. It may just be that the market is very bullish, but that according to your predictions this bubble will burst sooner or later and the market will get a correction. This correction can be quite large, but during this period, you can also respond to the downtrend by taking a short position. Protect your capital. During a long position you predict that the market will rise, whereby during a short position you are more likely to respond to a downward trend. But if you hold both positions the same size, in theory you can never make a profit or a loss. This way you protect your position and also your capital. This is done when the market is uncertain or when you cannot or do not want to just get out to convert your assets to a stablecoin or fiat. Disadvantages: pay interest. Borrowing these coins via an exchange is not free. You pay an interest to the owner of these assets. In theory, this interest rate is minimal, but therefore not unimportant to take into account. Potential loss infinite. Going short is actually the upside-down world. You make money in a downward trend, and in principle this limit is the absolute floor price. Between the current price and the bottom at which a coin falls back to $0, which does not happen in practice, is the range in which you can earn money with your short position. But what if your prediction is wrong and the price still starts to rise? It is important to realize that there is no absolute upper limit. If we take the previous example and look at the stock-to-flow model, it is possible that the price of Bitcoin goes to $500,000 or even $1 million. Then your potential loss is infinite. Swing trading. Swing trading is also a way to take short-term profits in both a bull market and a bear market. With a swing trade you look at the microeconomic situation in the very short term. Essential for a swing trade is knowing the market and using extensive technical analysis. A swing trader uses a support and resistance levels. During the market fluctuations, a swing trader buys a certain asset at the lower bound and sells it again when the price reaches the resistance line. Risk management is important and the use of stop loss is essential to minimize your loss. Margin trading, in addition to other strategies, is the use of margin trading. Here you make a trade where you borrow money and/or digital assets to execute a trade. This creates leverage, also known as leverage. This is a risky activity where an investor should be aware of the potential consequences. In a successful story, you increase your profit, as it were. But this can also result in a greater loss. Your current portfolio is always used as collateral. Example, you currently have a portfolio of $10,000, but you want to place a margin trade worth $15,000. You borrow $5,000. This is therefore a margin on top of your own assets. Which leverage or leverage you choose depends on your risk management and desired result. Advantages: when you make an accurate estimate of the market trend, you can significantly increase your position on the market in a short time. Even on small market shifts, as a good trader you can respond to this and take profits. Disadvantages: what is the biggest advantage is also the biggest disadvantage. Staring blindly at the potential gains without risk analysis is a dangerous business. The use of leverage is therefore often in practice a way in which investors lose a lot of money. This is therefore only reserved for very experienced traders who have years of experience with the market. Passive income. There are several ways to take minimum profits during a bear market. One of these is the generation of passive income. Of course, there are different ways to generate passive income, but here we focus on strike. When you decide to add your assets to a staking pool, you get an annual return. Depending on which digital assets and which strike pool, these returns are attractive and provide added value. Especially when you take long positions and do not plan to trade with your currency, it is definitely worth it. Of course, these currencies are also subject to market fluctuations and the value will logically also decrease during a bear market. Nevertheless, with this downward market you still get a nice return on your currency. These gains obviously won't be comparable to a growing market, but both in the short term and in the long term. Staking gives you extra returns. When you receive more assets, it will also be beneficial in the long term when the price of this currency will increase. Crypto pearls. During a bear market, it is often said that it is a big sell-off, and that it is of course the time to invest because the price is so low. Of course you also want to invest in coins that have a great potential to maximize your profits. Especially when we go back to the bull market. You can find these crypto pearls by doing your own research and determining which project is worth investing in for you. Conclusion. During a bear market, there is generally a lot of fear because the market is more volatile than ever before. In the past, we have seen assets lose their value by up to 70 or 80%. Nevertheless, it is still possible to make money in a bear market. These are always opportunities that arise in the short term. Please note that some of the options discussed in this video come with a certain risk. You have a great responsibility in this yourself, which also entails major consequences if you do not sufficiently delve into the possibilities and/or risks. It is therefore mainly experienced traders with sufficient knowledge and expertise who make use of these possibilities. Have you previously used one of the above strategies to make profits during a bear market or during periods when the market was relatively weak? Or do you have additional strategies of your own? Let us know in a comment below. Make sure to subscribe to our channel to be informed in time about the developments within the crypto industry and much more. We are considering making our channel accessible only for premium users, but if you subscribe to our channel now you will forever stay a free member. Okay, stay tuned and see you tomorrow.